I'll let you start, Enrico.
Well, I think first of all, we have to say that NetApp is one of the leaders in the data storage market. So this is important for this reason, and we know we like to know, if these companies are healthy or not, especially now with the cloud and more and more organization moving their data to the cloud. I mean, there is this idea to understand better what they are doing, why they are doing it, and if their strategies changing and adapting to the to new users needs. I think NetApp was the first, if not the first, one of the first really understanding that the cloud was going to change the landscape, and they started building a lot of services. They partnered with all the cloud vendors to build an ecosystem that makes sense for its customers, so that the customer now have a large platform that includes on-premises products and cloud services, and that there is interoperability, and they are building a lot of integrations and services on top of it. So this is about data mobility, about taking advantage of hybrid cloud infrastructures, et cetera, et cetera. And lately they have this Project Astra that is pretty nice. So there's all of this comes to fruition through a nice interface, and which is a managed service. So you don't think about storage, but actually in the backend, when you deal with Kubernetes, you have this complete set of data services that are very aligned with the DevOps mentality. So it's nice to see that they are doing well. I mean, their revenues are up, and even if the numbers are no longer comparable probably with what we saw 2-3 years ago, because there was a lot of boxing moving. Now it's more services and software than just hardware. So there is a different balance in their balance sheet. But actually, I think that again, they are one of the few showing positive numbers, and again, I think all in all that they have a good strategy, and it's reflecting in the numbers.
Yeah, like you were saying. So one of the things that you have seen is basically the revenue has been trending downward. I think 2018 was probably one of their better years from a revenue perspective. But one of the things you are seeing as well is the gross margin is going up, and the operating profit margin is a little bit, it's been a little bit wonky as it's going up and down, but overall the gross margin has been increasing, that's kind of also an indicator of more software sales and more selling boxes is usually really expensive, right? So when you don't have to sell boxes and you sell more software, it generally drives up the margin in general. So they are looking, overall relatively healthy, but pretty much kind of flat line. Like I said, revenue's going up, but it's going up a little bit. I would kind of expect them to be going, up at a higher rate, just given the industry itself is relatively healthy, and it's growing at a pretty strong pace, and they're not quite keeping pace, but yeah, they're doing good, right? They're long established, and they're not one of those high growth young startups anymore, right? NetApp, I remember back when they were, Dave Hitz, one of the founders, he actually wrote a phenomenal book. It's actually called How to Castrate a Bull. But it is one of the best business books if you want to see how, just old school Silicon Valley growth company. And there was a point, Dave was one of the founders, and I think his title he changed to it was VP of doubling, and he was in charge of how do I figure out how to double and scale the company? How do I figure out how to double it? Basically every, I think they were doubling every 6 months at that point. And it is a fun read to see how it, goes from literally kind of a garage startup to, thousands and thousands of employees.
Yeah, this is the Silicon Valley dream. I mean, starting building a huge company, but I'm not sure this is longer true. I mean, even after COVID, would you start your company in a garage with a lot of people inside it? No, but
It's
Now I'm going to interject because I feel like I know Jason. And Jason, how many bands have you joined over the years that were in the garage?
quite a few.
I feel like I can answer that question for him. Absolutely, he will.
Yeah. The a good number and a good number of the companies actually started in garages too. So the last company that I did, we started in a garage. We were in a garage in San Carlos, California, about 800 square feet, and that's where we built everything. I think the first 100, we built the first 100 boxes, and then I actually hand signed them like it was a Rolls Royce or something, where all the guys who build it like sign it, and I was like, built by Jason Collier in San Carlos, California, on this date, right? And there are still a few. It's like all the guys in support loved it. If anything like would come back, they'd always pop the case to see if it was one of the original 100.
that's nice.
It's fun.
So let me change the conversation a little bit. Something I've been wondering about personally is about the flow of the year, the flow of finances and technology. Obviously we see a lot of announcements happening at tech field days, at conventions, but is there a natural flow to the tech industry when these announce, like, from getting new money to investing that money to growth to when, generally speaking, in the year do shakeups happen?
Yeah, I mean, there's a lot. There's a lot in that question. I can tell you that over the years of me doing this, the kind of the startup industry has changed a lot. It is a lot easier to get a startup off the ground today than it was back in the mid 90s. It took a lot of startup capital to do anything, because nowadays, if you have an idea, typically if it's going to involve any type of infrastructure, you take it to the cloud, right? So you can start off relatively small, having, relatively minuscule resources. Back when first company I did was an internet advertising company, there was no such thing as the cloud. There was no, I mean, the only thing you could barely do co-location at that time. I remember the first colo facility we went into, that's not even what they did. It was a company that they transited like 800 like 1-800 numbers, and so it was a telecom data center, and then they were going to try this co-location space out, and we were literally in their main switching room where they had their VAX that was doing the call switching, right? So I mean, we're building stuff, sticking basically our Linux boxes at the time, and but doing that, I mean, there was no such thing as co-location, or like it was just starting, and you had to build your data centers. So, I mean, we started out and we had to build a data center. It was like, well, where are the big fiber trunks? And we built in like May East, May West, and then we had one in the Midwest, and we're getting ready to go to the international expansion. But the cost of that, I mean, every time you needed to build a data center is like $500,000, and that was a cheap data center back in the day. So the capital expenditure was a lot just for the costing, and now pretty much all the capital expenditure and venture capital goes to people, right? So you need a lot less to get started, which is where I think one of the things I see a lot, and what's actually translated through to the startup community, is you see a lot more companies that can do with seed and angel rounds and get a lot further before they need to actually raise an A round like they used to have to do, kind of, to even get a proof of concept. So you can get minimum viable product out there today, and you really don't even need to raise venture to do it.
And do you think that, I mean, not in the IT maybe, but in the rest of the industry, when we talk about startup, crowdfunding changed something, yeah, or is it just hype? Because I mean, every time I see Indiegogo or the other one, I see a lot of backpacks, a lot of fancy stuff, but not real stuff. I mean, I'm not a lot into, I just get the advertisements, and I don't know why they are still sending me all this stuff about backpacks or things like that. I mean,
right.
But it is way easier. I mean, you just throw an idea and say, "Oh, look, we are building this. Are you interested?" And people start, paying for your, product, even if the product is just on paper.
Yeah, and crowdfunding is interesting because now I'm trying to remember back to basically. So there are specific finance terms to if you are going to put money in a company, you have to effectively be an accredited investor to do that. And one of the things that crowdfunding did is it created effectively what you're doing is you're creating an LLC or an LLP. That will basically the LLP itself will hit the accredited investor rating. So you don't need to quote and being an accredited investor is like having, I mean, you need basically $1 million in liquid capital, right? Before you are quote an accredited investor, at least in the States, right? And what it did, it allowed a lot more people to basically get into it at a lower level. So you could put like 10 grand into the thing, and you don't have to like put, $1 million, into this to create that type of LLP to do it. So I think what it did is kind of the same thing what like Robinhood did for a lot of retail investors, right? It made it a lot easier to get in and do it, but there's still specific rulings and filings and things that need to be done. You're just kind of passing that off. Reality is, from a startup perspective, I don't see, of all of the companies I know, and I'm part of this group called Founders Network as well, where there's about, I think we're like 700 like kind of founders, strong in that network. I don't know personally anyone who's gotten crowdfunding. I know almost everyone who's gotten angel through basically, either friends and family or basically just kind of smaller angel groups within regional areas. I see that a lot more than the popularization of the crowdfunding thing. I'm sure it's out there. I'm sure there's folks that are getting money from it and getting stuff, but I just still don't see it that much.
I asked the question because for those of you who don't know, you're so lucky, but school is out for summer. Those of us with children have now had our houses flooded with tiny humans that look disturbingly like ourselves. I'm speaking from personal experience. My daughter's a clone, I think. And she is desperately trying to be quiet in the other room. But again, coming from the food industry, I think I mentioned that on air. I may have been off air. Coming from the food industry, the big show for us in Texas was the HEB holiday show. And so that happened. Good night. I could probably go down to San Marcos and crash it tomorrow. That's when all the holiday items, all the new items got announced. And so the year in the food industry follows a very, I told you she's trying to be quiet. It follows a very predictable pattern from year to year. And I was wondering if there was something similar going on with tech. And I think video games are very similar, where they announce things in time to be bought for the holidays.
Yeah, and also there are specific events that are very, very dedicated to to gaming. I think all of this is changing. I mean, there are more and more events, and there are more venues where you can launch your product. I think after COVID, we will see more of this. I mean, people don't wait too much now, and they also with the events that we attended lately. I mean, it's much more evolutive and not revolutionary. I mean, so the idea is that you get news continuously now, and so you don't see the big product announcement anymore. I mean, at least in the last 8 months, we didn't see something really disruptive, but a lot of minor evolution and continuous evolution. It's the way that these companies are developing software now, so their solutions. It's because we prefer to have a small step instead of a massive upgrade and things like that. I think it's so. Then our entire industry is changing a little bit. So I'm not talking about every industry. I'm talking about IT, and probably the fact that the development models change it, so we don't have anymore a huge release on a yearly basis. We have every 4 weeks we have additional features. So you don't talk about version X coming out to say, oh, we changed the word. Actually, you're changing the word step by step. So it's really, and it's difficult because we have a live show talking about news. We don't have news.
Which is why I end up talking about the food industry and HB holiday shows. What else? I mean, Enrico, you got the COVID vaccine, your first round.
This morning.
So we can come over and hug now. As soon as I can afford that ticket to Italy, I'll be there.
I can't wait.
It's exciting. And Jason, I think you and I talked about it last week about things slowly kind of returning to normal, getting to do those live shows, those conventions again, which I think we all complain about having to do conventions occasionally. Like, I have to travel, I have to do this. But the quarantine has really brought to mind how productive those can be. And how much we kind of miss out by trying to do them digitally. We can't go grab drinks after the conference. We can't, stay up till 4 a.m. in an IHOP where some of our best ideas happen. So I'm looking forward to those getting back in person. Guys, it has been, as you two know, and as kind of the thread of this conversation has gone, we are nearing the end of the second quarter. And at GigaOm, that means that we are in full swing of getting reports out and published and webinars out. It's a very exciting time. Just this last week, we had 3 reports from our VP of Research, Don Collins. We had a BTI case study, the ABCs of CI/CD, which is a DevOps related. We had the key criteria for evaluating GitOps platforms, and then attached to that, we also had a solution profile, which looks at a specific vendor by John Collins. And for this solution profile, we looked at Weaveworks within the GitOps space. We also have a few webinars coming up very soon. Starting on the 16th, Andrew Bruss will be meeting with Equalum for a webinar called Modernize Your Data Pipelines with Multimodal Change Data Capture. Boy, I need to practice saying that a little so it rolls off the tongue a little smoother. Goodness gracious. Brust also has another Brust is a monster when it comes to webinars. He's very good at them. We're doing another webinar with Andrew Brust and Cloudera, machine learning, production grade, and industry strength. Apparently that's the word I can't say. That'll be a really fascinating look at machine learning AI within the industry. And finally, we have a webinar on the 23rd starring our very own Enrico, meeting with Clumio, Understanding Cloud Backup and Best Practices. Now, that is all the stuff that we have published this week. So if you go on gigaom.com, you'll see a ton of new reports. You'll be able to sign up for a bunch of new webinars. But we have more coming. Just down the pipeline, Chris Grundleman has a report on secure service access. William McKnight has a report on evaluating master data management. Enrico, you have 2 reports coming up, specifically an update to the key criteria for file-based cloud storage, which is in my hands already, and a GigaOm radar for hybrid cloud data protection.
Yep.
Whew, running out of air here, guys, for small and medium-sized businesses.
There is another research that I am doing right now, and it's about decentralized storage, which is a fascinating topic.
Oh,
and, yeah, this is a new kind of report actually, and because the market segment is really new. I mean, it's not something that is fully validated by the enterprises. And the idea of decentralized storage is very similar to what we got in the past with BitTorrent and all the peer-to-peer networks.
Mm-hmm.
But it's more enterprise focused. There is blockchain involved to for data integrity, to to avoid any sort of data tampering, and also to remunerate the various actors that are working, so to rent the storage or buying the storage, and usually take advantage of a cryptocurrency. Sometimes it's a utility token, other times it's just something that you can trade at normal cryptocurrency exchange. So it's very fascinating.
Yeah, and we'll definitely
because
talk about that, and I'll have you on Voices of Innovation so we can talk about it in depth. I'm really looking forward to it. Okay, I don't know if I mentioned that school's out for the summer.
Yeah, I saw your daughter back there.
Yeah, no, well, she's not back there. She's right here. Everyone, thank you so much for joining us this week. We are out of time, and my daughter is out of patience. I want to thank both Enrico and Jason for joining me today. Jason Collier, you can be found on Twitter at Bocanuts, and Enrico, Signoretti. Very easy to remember. It's just first initial, last name. Again, one day I'm going to get you on Rake You Across the Coals and find out what Bocanuts is a reference to, but not today. You can, of course, find us on Twitter at GigaOm, but I really recommend you go to gigaom.com where you can read our blogs. You can sign up for all those webinars I mentioned. You can listen to Voices in Innovation. You can even subscribe to our research, which will get you all of those reports, all access to our future reports, all our past reports. Just a monstrous mountain of information and research and knowledge that you can have access to for all of your future forward advice. Again, thank you both for joining me today, and thank you for tuning in. I've been Johnny Baltusberger, signing off, and